Hi, I'm Robert Maltbie with Maltbie's Minute on the Market. Happy New Year. We started with an inauspicious thud from one of the greatest philosophers of the 20th century. There's a saying, it seems like deja vu all over again. And indeed, 2016 is feeling a lot like 2008 for a multitude of reasons. Where is the Black Swan? Is it China with their staggering debt, their shadow banking, their devaluing currency and slowing economy? Could it be an oil crisis looming, impacting banks, high-yield funds, investors, as the Saudis seem intent to drive out U.S. frackers by driving the cost per barrel down below 25, the break-even down to 20? Or could it be the mountain of debt globally that we now have? Over the last 30 years, aggregate debt has more than doubled. So now it is 3 times global GDP. So the more things change, the more things stay the same. And over the last 7 or 8 years, we've tacked on, the world has tacked on another 50 trillion in debt. Our indicators are, as we mentioned in December, right before Christmas, have gone bearish and remain so. So I don't have great news there. The Fed is neutral. They have eased up on creating money, and they've lifted rates slightly. So net, they're not helping right now. Our liquidity indicators have now gone negative, with $18 billion flowing out of the market, out of ETFs and mutual funds. And to make matters worse, the biggest buyer of stocks over the last 7 or 8 years, corporations, is on the sidelines until the blackout period ends after earnings. Earnings per share, earnings momentum, negative. The estimate is for a 6% negative growth rate in earnings for the fourth quarter. That will be the worst quarter since the Great Recession ended. Technicals, very negative. This is literally the tape from hell, led by small caps and transportations down 25 to 30%, and some stocks with leverage down even more. On the bright side, we've got sentiment, which is so negative it's actually positive. Volatility indexes, the punditry index of bull and bears, both starting to turn positive, showing what you normally see at a market bottom. Valuations, they have become more positive, going from 10% overvalued to 5% undervalued, still not cheap enough to draw in more money into the market. We think they have to go down another 10% to 15% before they reach that level. Let's look at, as life says, sometimes you get a second chance. Let's look at our stock of the month. Our stock of the month is Weight Watchers. It was announced in October that Oprah Winfrey was coming aboard in a stock deal. That stock went from 7 to 25, large part due to short covering. It's down 50% at approximately $12 a share, and we believe we've got another bite at the apple. Excuse the pun, but it addresses a huge a huge market domestically. The U.S. has got a pandemic in terms of obesity. Also, it is domestic-based. It's not contingent on a stronger dollar or oil prices. People start off at the beginning of the year with new hope and new meaning and desire. And we feel this company will be a big beneficiary of that as we move ahead. So, keep your fingers crossed. Look for the Black Swan, the other shoe to drop, and before you know it, hopefully we will find a bottom. So visit our website, millenniumasset.biz, subscribe, and get a full report on Weight Watchers and our market indicators. Thank you very much. Robert Maltbie, Maltbie's Minute on the Market.